Hey everyone, it's Tech here, and Nvidia just reported earnings. Now the numbers themselves, they looked pretty good, but here's the thing. The stock is absolutely tanking right now. So what gives? Why is everyone freaking out? Well, that's what we're diving into today. We're talking all things Nvidia, breaking down exactly why the stock is down, despite a seemingly positive earnings report. Make sure you hit that subscribe button and notification bell so you don't miss out on any future market updates. Let's do this. Alright, let's break down this Nvidia situation. On the surface, things weren't bad, not bad at all. In fact, they beat revenue expectations and their profits also looking good. So why is the stock down? Well, my friends, it all comes down to one word: margins. See, analysts were really banking on Nvidia to absolutely crush it on margins, especially with the whole AI boom happening right now. And while their margins weren't bad, they weren't as mind-blowingly amazing as Wall Street was hoping for. It's like ordering a triple chocolate cake and only getting a slice with double the frosting. Still good, but not quite what you were dreaming of. Plus, there's this whole tariff situation looming over everything. We'll get into that more later, but let's just say it's adding fuel to the fire. Investors are getting a little jittery, and when uncertainty rears its head, they tend to hit the sell button. But let's not forget, Nvidia is still a powerhouse in the AI game. They're supplying the chips that are basically powering the future, and that demand isn't going away anytime soon. So, is this a dip to buy, or is this the start of a larger downward trend? Honestly, it's too early to say for sure. Remember, the market is a fickle beast. It's driven by emotion as much as it is by logic. And right now there's a lot of fear and uncertainty in the air. So if you're holding Nvidia, don't panic. Take a deep breath, look at the long-term potential, and make a decision that aligns with your investment strategy. And if you're thinking about buying in on this dip, do your research, understand the risks, and never invest more than you can afford to lose. This isn't financial advice, it's just me, your friendly neighborhood tech enthusiast, trying to make sense of this crazy market. Okay, so Nvidia's having a bit of a moment, but what about the rest of the market? Well, it's not exactly a party over here either. The S&P 500, the Nasdaq, and the Dow are all down today, and it all boils down to one major concern: inflation. Remember that thing that was supposed to be transitory? Yeah, it's still hanging around like that one friend who never wants to leave the party. And the Federal Reserve? They're not too happy about it. They've been raising interest rates like crazy trying to get it under control, but so far, it's been like trying to put out a fire with a squirt gun. And to make matters worse, we just got some new jobless claims data, and it's not pretty. The numbers came in higher than expected, which is never a good sign. It suggests that the economy might be slowing down, and that has investors worried about a potential recession. Now tomorrow is a big day, because we're getting the latest reading on the Fed's preferred inflation gauge. If it comes in hot, it could mean even more interest rate hikes are on the way, and that could send the market into a tailspin. So yeah, things are a little uncertain right now, to say the least. But here's the thing, the market goes up, the market goes down. It's a roller coaster, and right now, we're on a bit of a downward plunge. But just like any good roller coaster, there's always another climb coming. The key is to stay calm, don't panic sell, and focus on the long term. Remember, time in the market beats timing the market. So buckle up, hold on tight, and we'll get through this together. Okay, remember how I said there was more to the Nvidia story? Well, buckle up, because things just got a whole lot more interesting. President Trump, in all his wisdom, has decided to slap some new tariffs on, well, pretty much everyone. We're talking a 25% tariff on goods from Mexico and Canada, a 10% increase on tariffs from China, and let's not forget about the tariffs on the European Union that are already in effect. It's like a global trade war just broke out, and guess who's caught in the crossfire? That's right, companies like Nvidia, Apple, Tesla, basically any company that relies on global supply chains to manufacture their products. These tariffs are going to drive up costs, which means either companies eat the cost and see their profits shrink, or they pass those costs on to consumers, which could lead to higher prices and slower economic growth. And let's be real, nobody wins in a trade war. It's like two kids fighting over a toy. Everyone ends up getting hurt. The stock market hates uncertainty, and these tariffs are injecting a whole lot of uncertainty into the global economy. So, what does this mean for you? Well, if you're invested in companies that do a lot of business internationally, you might want to brace yourself for some volatility. And if you're a consumer, get ready for potentially higher prices on everything from iPhones to cars to, well, pretty much everything. This whole tariff situation is a mess, and it's hard to say how it's all going to play out. But one thing's for sure, it's adding even more fuel to the fire that's already burning in the stock market. Alright, let's shift gears and talk about something a little more, shall we say, digital. Bitcoin, the OG cryptocurrency, has been on a wild ride lately. It dipped below $90,000 recently, and everyone was freaking out saying the bubble had finally burst. But guess what? Bitcoin doesn't care about your doubts. It's back, baby. And it's coming back with a vengeance. So, what's driving this resurgence? Well, it seems like the big players are starting to see Bitcoin as more than just a speculative asset. We're talking about institutional investors, hedge funds, even pension funds. These guys are putting serious money into Bitcoin. Take Paul Tudor Jones, for example. He's a billionaire hedge fund manager and he just doubled down on his Bitcoin bet. Why? Because he sees it as a hedge against inflation, and he's not alone. More and more institutional investors are starting to see the potential of Bitcoin as a long-term investment. Now, I'm not saying Bitcoin is going to the moon tomorrow or even next year, but I am saying that it's clear that Bitcoin is here to stay. It's not just a fad anymore. It's a legitimate asset class that's attracting serious money from some of the smartest investors in the world. So, if you've been on the fence about Bitcoin, now might be a good time to do your research and see if it's right for you. Just remember, it's still a volatile investment, so never invest more than you can afford to lose. Alright, so let's recap what we covered today because it was a lot. Nvidia had good earnings but not good enough for Wall Street, so the stock took a hit. The overall market is feeling the pressure of inflation and those pesky interest rate hikes. And then there's Trump, who decided to stir the pot with a whole bunch of new tariffs. Oh, and Bitcoin? It's back from the dead, thanks to big money pouring in from institutional investors. So, what do you think? Is Nvidia a buy on this dip? How do you think those tariffs are going to affect the market? And are you bullish or bearish on Bitcoin? Let me know in the comments below. I'm really curious to hear your thoughts. And hey, if you found this video helpful, hit that like button and subscribe to the channel for more market updates and tech analysis. Thanks for watching, and I'll catch you in the next one.